Hey, good afternoon, everybody. It is June 7th, and we are at the closing bell. It's been an exciting day here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by Money Block. And we had our first guest today. It's kind of fun. I miss my partner, but I took back the captain's chair. My brother Matt was on. He did a spread trade in PayPal, and because he had an opinion and he wanted to jump on, and I said, let me walk you through how to do a spread. He's traded stock before. He's traded single leg options, but never did a spread. And so I helped him through it, and it was a lot of fun, and I hope you all enjoyed it as well. But let's talk about today's markets, because they basically were in a grindy mode. Not much activity, average volume. Advancers were outpacing decliners, but there was really no conviction. Now, the bears have not gained any ground, nor have the bulls. The bulls have been in control, but taking a look at the markets, you can see right now, just looking at the major indices, the Dow Jones just grinding up here above its 20 and 50-day moving average, but that grind is starting to wear. Tomorrow is going to be the day. You're going to have the ECB. They're going to be coming out with their policy decisions. You're also going to have the Comey testimony, and that should or may not have any potential fireworks. And then you're finally going to have you're going to have some economic data that's going to be coming out that could move the markets. Now, one thing that's notable is today we didn't have any kind of headline risk. We didn't have anything of that nature. Oh, and of course, why I couldn't remember, the UK vote. We're going to see if the Conservatives can still hold on to control. It looks like Prime Minister Theresa May looks like she's still in the lead, but we're watching some of the parliamentary races. The reason why this is being scrutinized so much is that if the Conservatives, who really pushed for the Brexit, if they lose control in Parliament, that's going to put some potential ripples into the Brexit continuation, and there could be a lot of volatility that could come out of that. Taking a look further at the market, we want to take a look at the NASDAQ. The NASDAQ, this has been leading the market. This is what basically the market, it's on its back. It is on the NASDAQ's back, and if there is any weakness in any of the FANGs, Facebook, Apple, Amazon, Netflix, Google, Microsoft, any one of those names, you start to hear any of those names start to have any weakness, that's going to turn the potential market. Still above their 20 and 50-day moving averages, but we'll watch this closely because they're grinding. Another market that's been grinding is the small caps, the Russell 2000. Finished up today at 177, but the notable thing is that it's held its ground on the bullish side. The short-term and intermediate-term bulls are still in control right now, have been for the last couple sessions, but you have a grindy little area here, and the moving averages have consolidated quite a bit. So let's keep an eye on that, because that could get very interesting. One market that did move today was crude. Crude got pounded. Taking a look at the West Texas contract that we trade here in the U.S., down 224. That's good for 4.67% to the downside at 45.74. As I had noted, once it broke $48, yes, I wanted to watch the inventory number, but my sentiment was that the new, let's say, base is more in the $44 to $45 level. And it broke. And the reason why it broke so significantly was after the EIA report. We wanted to keep an eye on that. There was a build of 3.3 million barrels. That is bearish for crude. We have record online rigs so far. We continue to have record supply. The demand has dropped off this week after a pretty significant drop for the previous 2 or 3 weeks. So we see a little bit of slowdown here. We did see, though, that the Brent contract did bounce off of its worst levels, despite the fact that we're starting to see some OPEC nations potentially waver, especially now that a lot of the OPEC nations are trying to disassociate themselves with Qatar because of the Qatar's potential association with terrorism. With that being said, we're going to watch all of this. There's also one other notable headline that came out in the commodity space as it revolved to oil. India. India looks like they're going to be pulling back their net imports. They're going to try to get energy independent. That's a big significant blow to the oil contract. We'll see if that actually continues, but they said that they're going to drop their dependence on oil. They want to drop their imports by almost north of close to 80%. So we'll keep an eye on that. As a matter of fact, watch tomorrow morning as we talk about everything that's going on in Asia, and we'll touch on India. Now, the bonds down on the price side. That means yields were up ever so slightly. As a matter of fact, taking a look at the 10-year yield, yes, the price was down. 10-year yield bounced ever so slightly, up to 2.17%, but nothing significant, and the bears are still in control as far as yield is concerned. That means the prices in bonds still have some potential leg to the upside. What I wanted to do is take a look at some of the ETFs that track the major indices I just talked about, and I'm going to give you some ranges or estimated moves for the next couple of days going into tomorrow's events with the ECB, the European Central Bank coming out with their policy statement. That could move Europe, and we'll be on at 8:45 Eastern Time to talk about that. We're also going to be watching and listening to the Comey commentary. That could potentially move the market. And we will continue to watch all the other developments that are occurring. But let's just take a look at the diamonds. The diamonds right now are trading at 211. And for the next 2 days, the options that are expiring this Friday are pricing in about a 0.5% range, either up or down. So that's about $1.05 in the diamond. So you could see it at 212, almost basically 212.75, 212.77, or you could see it as low as 210.65, 67. So about a 0.5% range for the next 2 days. You're seeing also in the spiders, which is the ETF that tracks the S&P 500, went out at 243. They're pricing in a 0.5% range for the next 2 days. That means going into these events tomorrow, they're pricing in the potential of about $1.19, either to the upside or downside. You could see it as high as 244.80 or as low as 222.40. I'm rounding a little bit just for math's sake. Taking a look at the QQQs, that's the NASDAQ ETF, pricing in about a 0.6% range. That's good for about 91 cents. So you could either see it at 144, basically 40, or you could see it as low as 142.40. So interesting action there. And then the Russell 2000. Pricing in about 0.7% move. This is the biggest one. And obviously, yeah, it doesn't sound like a big move, but for a 2-day move, it's decent. But they're not expecting a huge violent move going into these events. So, you got to be on your toes. Complacency, stay on your toes, keep your powder dry. That's about 109 in the IWM. That's the ETF that tracks the Russell 2000. You could see it as high as 140, or you could see it basically as low as 137 or 138. So got some decent ranges there for the next couple days, but nothing that I would say is earth-shattering. There's no volatility being expected going into these events, which is not too surprising, but that means that you have to stay on your toes. When I say volatility, take a look at the VIX. The VIX was down today 10 cents. Basically, getting some clarity tomorrow could help these markets get to some sort of catalyst to the next leg to the upside, but we'll have to wait and see. All right, folks, join us tomorrow morning. I'm going to be looking at Asia, Europe, and the U.S. all on the open. I'm going to set the plate for you, and thank you for watching Market Stream. We'll see you then.